Test, test, test. 1, 2, 3, live. Wonderful. Welcome everyone to today's Cake DeFi Twitter Space, Tuesday, 26th of July. We're doing those Twitter Spaces always on Tuesdays, 6:30 here in Singapore, 12:30 lunch, Europe time, and 6:30 a.m. Eastern Standard. So if you're tuning in live on Twitter, welcome. And yeah, thanks as always. We have exciting topics to discuss. We're going to talk about the Fed decision that's coming up this week. It's actually a very, very crucial week, the entire week. Fed decision, we have GDP data. Are we in a recession or not? I am predicting that it doesn't matter what the results are going to be of that GDP data. We are not going to be in a recession. Why I believe that, let's discuss that. And then we have quite a few companies actually reporting earnings this week, and I think that's also going to be crucial. Would love to talk about a very exciting promotion we are running at the moment on Cake DeFi around D tokens. This may be very interesting for you. And yeah, we're also going to try something new today. We have the Twitter space going on, and then at the same time, we are trying to do a video recording that we may or may not upload afterwards. We don't know about that yet, if that actually is going to work out or not. So yeah, let's see if that's going to work or not. And as always, I have, well, our fabulous head of community with us. Fabio, how's everything going?
Hey, everybody. So this is a real test. We kind of have some elaborate setup where the computer is recording with an external camera and a mic on both Julian's side and on my side. And while we are participating with another set of audio, microphone, and mobile phone in the Twitter space. So let's see how this goes. But if all goes well, we will be able to provide you with video.
You know, one thing though, even though I hear you via the Twitter space and I see your video via our video recording, I do see the mouth quite synchronized. So I'm actually quite impressed about that. I don't know how you see that, but it looks quite good actually.
It does look like it is working, yes.
So fingers crossed, we're going to have great quality afterwards. Cool. I don't know. Are there any other topics that I missed to discuss that you feel like the community has been discussing, or just things we should kind of discuss a bit?
I think you gave a great overview. I have on the left side of my screen, I have a little bit of a summary what is happening this week. I think we have almost all the FANG stocks releasing earnings. So starting, I think today we have Alphabet and Microsoft, and then on Wednesday we have Meta, and then on Tuesday we have Amazon and Apple. I think that's all the things, no?
Yeah, quite close
Netflix.
actually.
Netflix is missing.
Yeah. Netflix reported, I think, 2 weeks ago or 10 days ago.
Yeah, but definitely an exciting week on the macro landscape. Within our own community, it's pretty silent. Like, we don't see a lot of volumes on Telegram. Mostly new users that we are onboarding and that are asking general questions on how to use the platform, how to finish their KYC. So I guess business as usual. Nothing too exciting to be sharing there. I think the best thing would probably be if we dive right into the juicy stuff.
Cool. Let's do that. Where do we want to get started? I don't know, maybe what do you see the chatter in the community discussing this week ahead? I would assume there was a lot of discussion around the White House kind of changing a definition of what a recession is. I don't know if you want to start there, or if you want to start about the Fed announcement that's going to come out tomorrow or Wednesday US time. I don't know. Where do you want to start? Maybe a general sentiment. What do you see from influencers? I don't know, maybe let's start there.
Yeah, I think this is probably the most juiciest of them all. And also, I'm kind of excited for your take, because you said that we might or might not be in a recession. And if you ask, so I think I shared that last week, Benjamin Cohen made a survey, and he asked his Twitter following, is the US currently in a recession? This is about 10 days old, and about 90% So nine out of 10 people think we are already in a recession. Just maybe as a friendly reminder, what is a recession? So the technical definition is 2 consecutive quarters of negative GDP growth would put us into a technical recession. I think this is also the thing that the White House delisted or deleted from their website. And we already had 1 negative quarter of GDP growth, and the data, so the first print of US Q2 GDP is scheduled to come out around midday, first day this week. And forecasts or estimations, if you look on Twitter, like especially within my own echo chamber, I would say people are forecasting -2%, -1.5% negative GDP growth. But if you look at what politicians are saying or people on national TV, they're actually forecasting a 0.5 growth. But it's really hard to say. Maybe we will know more when the earnings numbers from Alphabet or Microsoft are released. My personal impression that I got is that we are definitely going to see a negative GDP growth. Probably you're going to say something different, but yeah, I think the chatter, especially on Twitter, is that we already are in the recession, and that first day the numbers will practically confirm that. What is your take on that?
No, 100% agree. I mean, I posted on July 1st that this is the first day of officially being in a technical recession. I do see the laughable definition change of what a recession is. Quite constructive though, even though I'm kind of making fun of it. The reason is I understand the intent behind it, even though I think it's absolutely laughable. But the intent is that they're going to try to milden the impact on the outcome of it being in a recession. I think the news articles are going to be around not in a recession, but slower growth or something. And I think the average mom and pop investor is going to be like, "Oof, we're not in a recession. All good. We kind of avoided that iceberg." So I do understand why they're doing it. I think it's absolutely disingenuous. However, makes sense to me why in the whole thing, in the bigger scheme of things, why they're kind of approaching that. So to me, I would say we're 99.9% in a recession based on the definition that we have seen just a week ago. I'm 99.9% sure we're not in a recession in that new definition. But yeah, that doesn't mean anything in my book. Yeah, I honestly think this was expected. I think the bigger question then becomes, is this recession going to lead into a global depression, which obviously would have some bigger kind of concerns where people really going to get a bit cautious. But then on the other hand, I mean, look, we had this massive money printing over, and obviously the rising interest rates also falls into that. We've had massive money printing. Somehow we need to get that money out of the system. A lot of people who got a lot of that money, they need to lose that money again, right? So it's actually quite harsh. It is harsh. If we're taking money out of the system, that means it has to be taken away from some people, whether these people like it or not. And that's just how it is. And so the Fed right now, the administration, I mean, they need to kind of go this route a bit. So whether people like it or not, it's not going to be easy.
Would you say that if on first day the numbers come out, there is negative GDP growth, it would us put into a technical recession? Is this priced in? Is this a bullish or is this a bearish thing?
I think completely neutral. I think we discussed this so much here on the show. And the expectation of an event for an outcome of the price is almost the same as the actual event. It's a super tiny difference only. If everyone would know that tomorrow the Bitcoin price would be 30,000, if you're like 100% sure about it, right? Then what would everyone do today? Everyone would buy today. Sure. Because right now the price is what, 21,000. So you would have a guaranteed return. Well, everyone buying right now would push the price really close to the 30,000. It wouldn't put it to 30,000, but the expectation of the event is basically the same as the actual event. So, yeah, I don't know. What do you see? What do people say on social?
I would agree that it's probably both the Fed meeting that we are going to see two tomorrow evening. So the expectation is a 75 basis point rate hike, and the GDP numbers on Thursday, that both of these are actually priced in, and the market is not really, maybe that there is a little bit of a dump or a little bit of a pump on them in the moment when the numbers get released, but nothing too significant that the larger part of both of these outcomes is already priced in. I would say that a lot of people are expecting this to be a non-event.
Let me try something very curious. You're only going to see this if that video actually works afterwards, but you can just Google this yourself. If you go on Google Trends and you look for interest over time on Google about the search term recession, we have a pretty much all-time high right now over the last 20 years, close to 20 years. So the term recession hasn't been looked for that long as of right now. So that shows people are not going to get fooled. They know what's happening. Doesn't matter if you change any kind of definition or not. I thought that was quite interesting to see.
You had a pretty confronting tweet, I think, earlier this week, where you were talking about all of the let's say the blame game that certain politicians or certain people in the media are doing right now, where there is all kinds of finger pointing to why there is inflation and why there could be or there is a recession right now, and mainly, of course, the pandemic, Putin, and the war in Ukraine. I think there's, as a result of that, supply chain issues, and a lot of politicians and the media practically telling us that this is the only reason why we are seeing inflation and why a recession might be on the horizon. Should we go a little bit into that?
Man, we can. I made this very long German video yesterday on my personal YouTube channel where I was quite emotional. I went on this rant where I was just complaining about, actually not so much about the politicians, because that's quite predictable, but I was just complaining about the naivety and the stupidity of actually a lot of us, right? And I'm really saying us because I don't want to say of them or point fingers, because, I mean, there's this famous quote, we all get the politicians, we all get the leaders that we deserve as a society. And I don't know, at the moment, I feel it's quite horrible. So like politicians and leaders kind of playing to that narrative that, in my opinion, is as wrong as it can be. It's just a reflection of ourselves. And I don't know, I felt this was really, really shocking to just see. And it all actually came from a conversation I had with a friend of mine. And friend of mine is from Austria, very typical Austrian, very typical European. And I asked that person, I said, hey, why do you think prices are up at the moment? And that person said, well, it's super straightforward. It's because of the greedy companies. And all these companies are so greedy, they're profit greedy, and they just want to make money off us. And to me, that was just shocking, right? That someone like, and I mean, I'm not saying that person is a very smart person. I'm not saying that person is a dumb person. I'm just saying this is a very average person, right? Like really, really average, not super educated, not uneducated. And I was just super shocked that this narrative that you see a lot on social media being shared by various political parties, and you see this in the US and you see this in Europe, that this narrative actually gets picked up by people. And my answer to that is very straightforward. Like, sure, I mean, I would never deny that companies don't want to make a profit, for sure, 100%, right? But then on the other hand, do you really think companies are more greedy now than they were 2 years ago? So why did prices go up now and not 2 years ago? What changed? Also, do you not think that one company out of this entire greedy complex, and I mean, you would have to have thousands of companies kind of conspiring against the general population. Do you not think a few of those companies are going to break out and say, let me take advantage of those high prices, let me lower my prices so I can get more customers? Trust me, most companies would do that. Yes, I know some of these companies are making tons of money, but then just look at the earnings. I mean, Walmart. Why do you think yesterday Walmart, right, that got totally destroyed by the market? 8% on a single day. You know, like we're talking about a giant in the US. Why? Well, it's very simple. Because greedy Walmart, right, that wants to make money as much as possible, is actually, their profits are down. So why do you think their profits are down, right? Do you think it's because they're so greedy, or do you think it has other reasons, right? And the crazy part about all of that is that people just, for some reason, they don't want to hear that, right? They don't want to see that. They then, and I mean, I discussed that with that person, right? And then that person said, well, but the other thing, it's mean Putin, right? Putin is the reason, and it's the Russia war, and it's Russia attacking Ukraine, and I definitely like believe that the war had some impact on prices. But if you just look at the facts again, you look at oil prices. Oil prices now are lower than they were at the beginning of the war. How is that possible, right? But the war is still going on. So how is it possible that if it is the war that create those high prices, how is it that the prices are lower right now than at the beginning of the war? And so it cannot be the war, right? So it cannot be Putin. And again, I do believe Putin is absolutely like to be judged and blamed for that war. I'm not saying that the West has absolutely no interest in that. I'm not saying that maybe the US says, hey, you know what? Maybe it is actually not so bad that Russia invades Ukraine, because now this gives us a great scapegoat for all the issues we're having, right? Again, I'm not saying this is not true, because I know the counterside to that. And I know that there are certain political pressures that actually want to get that war even fiery, right? And I think like that's absolutely destructive. I would love to have no war, right? That's absolutely crucial here. I definitely think that Putin is to be judged and prosecuted for like attacking in that war. And again, I don't think that it's just one party that's to blame. I always think there's two sides. I think one side could have de-escalated the war. But blaming everything on Putin is absolutely ridiculous. So if we then go further down in the kind of blame game here, then we have supply chains. And sure, supply chains are absolutely crunched. They are a major, major reason on why prices have gone up. And that is one of the main reasons why I actually think we're going to see deflation by the end of the year, because I do believe that these supply chains are going to open up. We see this already. We discussed this, I think, in last episode, where a lot of these supply chains just got solved. And so to me, I totally accept that the supply chain crunches have a massive impact on prices. But the fourth reason, and that's such a crucial reason, is just that massive money printing, right? It's money printing money printing galore over the last 2 years. And yes, we had money printing all the way from 2008 until 2020, but never in this extent as over the last 2 years. M2 just skyrocketed. So M2 money supply skyrocketed in all the countries. And here's the major surprise correlation, because all the countries in the world, right? All the countries in the world are affected by greedy companies. They're affected by the war. They're affected by the supply chain crunch. So how or why does Switzerland or Singapore, who barely printed any money over the last 2 years, why do we here in Singapore or Switzerland, why do we have, I mean, we also have high inflation here in Singapore now in comparison to the last 2 weeks. I think our inflation here in Singapore is at 4%. And Switzerland is also at a similar kind of rate. But why do we have so much lower inflation or price increases in comparison to the US or the rest of Europe and many, many other countries where the money printing was just exorbitant, right? What's the reason? Do you think that companies in Singapore or in Switzerland are less greedy than in the rest of the world? Do you think we are affected less by the war? Do you think the supply crunch just somehow affects us differently? Or do you think it is because of the money printing that was just like also happening here or in Switzerland, but was just way more conservative, where in the US, it was just money printing galore, like Europe, money printing galore. And so there's these impacts that are way stronger. So now comes the crazy part though, right? So you have all that. So you know how to fix it. Well, you fix it via two ways. You need to solve the supply chains. And if you solve those, the prices will definitely go down. At the same time, you need to get money out of the system. To be honest, you don't need to get all the money out of the system that you put in. That's fine. You don't have to. That's okay. But you need to get some money out of the system. Now, here's the crazy part. When I kind of discussed all this through with my friend, and then I said, okay, so what do you think is the best solution right now, looking in Austria, where like fuel prices obviously are up over the last year, food prices are up, rental prices are up. What would you do? And that person said, well, we need to do exactly the same thing as we did through COVID. We need to give everyone bonus checks. We need to help them by giving them more money. So I just sat there and I'm like, you know what? It's just absolutely incredible. You have like this lamb running into the slaughterhouse And that person is cheering for the slaughterers and says, you know what, man, you all are so stupid out there. I know the solution. And that person keeps running further down. And then you have the evil part, in my opinion, but the very understandable part, where you have all these politicians who come in and actually use exactly that narrative and attract so much of this voting power because people are just not educated. And that to me is such a shocking part. It's not so much the shocking part that politicians, and I mean, I tweet about this all the time. I retweet those narratives where I'm like, oh my goodness, I just can't believe how like ridiculous the statement is. But the shocking revelation to me was, I always thought it was the politicians trying to kind of fool the people. But it's actually not the case. It's actually the politicians simply giving the people what they want to hear. And that to me is just so dangerous and so toxic, where I don't know, the only way to resolve that is by better education. And this is really up on all of us. And that's always why I'm not saying the they or you or something. It's like us. Like, it's incredible how dumb we as a society have become, how easy we get tricked by the media and by politicians. And to me, that's sometimes just super, super shocking. And that was just a big revelation, to be honest. I don't know, Fabio, how you see this or what your own experience is. And maybe one thing, right? If you don't believe me on this, simply go to people who are not like super financially educated. Just go to them and say, hey, why do you think prices at the pump are up? Why do you think food prices up? What's the reasons?
Yeah, I completely agree. Like if I ask people
muted,
that,
Fabio.
oh yeah, sorry, I completely agree. Like if I ask people that are not within the crypto space or that have a high level of financial literacy, a lot of them are actually suggesting. So you can see this in Europe. We are a little bit further along the curve than other countries. Here in Europe, we already had like the first airdrops for energy subsidies, and they're talking about more of them. They're already, like Germany already has some sort of price controls for certain commodities like gas and fuel, and there is probably more to come. And the general consensus here is that this is a good thing, because like some people, they understand that big corporations got a lot of cheap money, and the money kind of stayed with them and they didn't get any of it. They got the negative effects of that, the inflation. But now the politicians, they kind of play the blame game, and they say, hey, it's these corporations and it's Putin that is responsible for this. And here is our helping hand, and we're going to help you through these times. And while on first sight, this might look as a relief and as a good thing, in the long run, it is devastating, because we're just going to end up with even more inflation, especially if you. So if the economic and the people are in the middle, and you drop money from the top by having cheap money for central banks and for institutions, what we practically had over the last 10 years, it's like a waterfall dripping down, and there is not a lot inflation actually coming to the core products that you and I or everybody's consuming. But if you drop in money from the bottom, this will have a direct impact. Like it's not going to take months or years until we see prices increase. But if you drop money from the bottom, it's going to be a direct increase in prices, and we are going to make things even worse in the long run. But I'm not 100% sure if our politicians are navigating us through these times within our best interest. In my opinion, it's a lot of short-term thinking that these politicians, they are elected for a few years, for 1 year, for 4 years, depending on the country they're elected, and they just want to get out with a scratch, and practically kicking the can down the road. It's not a good place to be in, I guess.
100%. I mean, and these are just very basic economic kind of principles, right? That people just tend to forget. Like, obviously, price controls, right? I mean, sounds so fantastic. Let's put in a price control. There are very, very, very few examples where actual price controls work. One of the few examples are certain types of medications. It's one of the few examples where there's a very strong benefit for humanity to have like forced caps on prices on medications, for very obvious reasons, because it allows pharmaceutical companies not to just charge anything on certain medications, especially if they have a patent on that medication, and it would really help a lot of people. So here, the supply and demand it really kind of gets favored to the demand side, because otherwise these pharmaceutical companies would start weighing the cost of a life, right? And so one of the very few ones. But so let's think this through, right? So let's think it through, and you're like, you know what? I think I don't know, fuel companies need to be capped. Like, what, I don't know what the prices are in your regions for fuel, but let's say here in Singapore, I mean, prices also really kind of skyrocketed. Now they have been coming down. So let's say in Singapore, prices are over $2 a liter for fuel. And then let's say the Singapore government comes in. And the funny thing is, right, the government here is so super smart. They actually made a news article about this where they discussed this through on why the price control would not work. And so to me, that's just so smart, where the government here then comes out and says, you know what, that's the reason why we cannot do it. Because the same voices get loud here as well, where people say, hey, why does the government not impose those price controls? Well, let's think this through. What would happen? Let's imagine the Singapore government would have the possibility to force all the companies here. I don't know, I think there's like maybe 4 companies that provide fuel here in Singapore, and they would force all of them to sell fuel under $2. Well, guess what all these companies will be doing? They'll be like, well, screw that. My purchase price is so high that either this is not profitable anymore, so I'm just not going to provide any fuel, because why should I? Instead, I'm actually going to let people go because now my business is in danger. Let's say they still can make a small profit, because probably the government wouldn't be so stupid to lower the price to a level where they would know then afterwards there wouldn't be any fuel provided. But then all these companies would go and say, hey, guess what? Singapore is not the only country or the only region where I'm supplying fuel to. I also have Malaysia, I have the rest of Southeast Asia, I have other countries. I mean, a lot of these fuel companies here, Shell and so on, I mean, these are super international companies. I mean, I'm just not going to deliver any oil to this region anymore. I'm just going to deliver all the oil to the rest of the region, and this is way more profitable to me. So it goes so quick, right? And you just need to think, put yourself on the other side, right? Just imagine someone goes and says, the maximum amount you can charge is this now. Then you compare and you say, well, is this really what I would be interested in doing? Or if I have 60 other options, and all these companies, they have so many other options, you just go somewhere else. And this is why this makes zero sense. And I know this doesn't sound like it at first. And you can blame me in saying, Julian, it's very easy for you to say that because you're an investor and you're relatively wealthy and you're the CEO of a company. And of course you own half of that company. And of course you're going to try to play that narrative. Fair enough. I don't want to say that I'm biased, and I have a lot of bias on this for sure. But then, like, facts and reason don't really care about your opinions. It doesn't really care about your emotions. It always plays it out by itself, and it's just it's just very straightforward there. So, yeah.
And you were lucky because you were living in Singapore.
I think it's a great place to be. I mean, it wasn't. I was suffering. I have to admit that, right? And I was very critical. So, I mean, as much as I love that place, and as much as I believe there was a lot of things that went really right, I was quite critical, especially in 2021, where I personally felt the lockdowns here were a bit too long. That was just my personal criticism on the lockdowns, and it was not only me. I mean, there was a lot of people who felt that the country maybe could have opened up 6 months earlier. I mean, obviously today, I mean, coulda, woulda, shoulda, who knows? I was quite unhappy. I think Singapore is really fantastic, but you have an entire year of like 35 degrees and 100% humidity. And every once in a while, you just need to get out. You need to get some cold air. And so that was like my only complaint last year. But other than that, it's fantastic. I really love it here. But I mean, look, other countries did it really well as well. Switzerland, I think, a great example, right? I really think like it's such a prime example because, like, let's be real here. The population, the average person, the income, sure, Swiss people generally tend to make a little bit more money than a lot of the neighboring countries. But let's be real. I mean, there's not much difference. Austria, Germany, Italy, France. I mean, all these countries that kind of surround Switzerland. So what makes Switzerland so much different? It's not the geography. It's not the kind of economic access. There are no natural resources that Switzerland has that other neighboring countries doesn't have. It's purely the politics. It's purely, and with politics, I'm talking about the decisions the government makes, right? It's the policies that get set. And it's just clear that better decisions lead to better outcomes. And I don't know, I'm just always amazed how people just love to ignore it. I mean, I don't know, Fabio, you're Swiss. I mean, I know you're not living in Switzerland, but you should have some pride in that as well. I mean, I feel Switzerland came out of all of this. I mean, could they have done stuff better? Of course. All the countries did, especially in hindsight, right? I mean, it's not difficult. But I think with all the information we had at any given time, I don't know, you should have some patriotism there as well.
Oh, yeah, I do. So I'm not attached to any particular nation, and I try to look at it as objective as possible. But I had a conversation with my brother yesterday about that, and we were also talking a little bit about the macro and what the future holds. And he told me, "Hey, dude, I'm so glad that I live in Switzerland because during the last financial crisis." In like 2008 to 2012, it depends on the jurisdiction where you're living when this was affecting the region. But for example, in Switzerland, we knew that this was happening. We knew that there was a financial crisis. You could see it on the news. You could see the whole Lehman Brothers thing. And you could see that in Europe, they're struggling with this. If you were living in Switzerland at the moment, which I was, you were not affected by that at all. In Switzerland, nobody was laid off. There were no companies that went belly up. There was no inflation. There was nothing. It's just like nothing is happening. You could see everywhere, like you're practically an island in the sea of the European Union. You could see that they are struggling with this, and they really have a financial crisis. But Switzerland was practically not affected by that at all. They managed to navigate around COVID very good compared to of course they made mistakes as well, but they were super fast to open up. They made it out of this crisis perfectly fine. But if you compare, like a lot of people say, yeah, Switzerland is just so expensive. But if you really look at what happened is that so Switzerland is surrounded by a sea of European Union. All of them use the euro. If you go 20 years back, the euro was trading at 180. It's at parity right now. So it's practically lost 70 to 80% of its value in 20 years. And of course, if you're in Europe and you go to Switzerland, it's very expensive, but you have it the other way around. If you're a Swiss citizen, I think there was a day, I don't remember which year it was. I think it was 2012 to 15 in that time frame, where the euro dropped from I think 150 to 110 or so, and then they pegged it at 120. And on this day, I remember this day very, very, very vividly, because a lot of Swiss citizens were like trading their own currency. But on that day, practically the whole world and the whole European Union got 20% cheaper for all Swiss citizens, and the other way around for European citizens. And it's not that the Swiss are exceptional at playing the monetary game. They're not. They don't play in another league. They're not. They are good, but it's just that the European Union is so bad at playing that game. Switzerland is not super smart or anything. They just do the basics. And the other countries around, they kind of don't. Yeah.
I think it's a good point. I think in a lot of things, I also made that tweet where I think great investors are actually not that they get so many great bets, like they don't have so many home runs, right? They just don't have those like total wipeouts. And I think that's like, I think it's so true. And I think it's in a lot of decision making as well. Like I think the best decision makers is not like they have one like 10 out of 10 decision after another. It's just like they don't have those 0 out of 10 decisions. And I think, I mean, a lot in life is like that. So so okay, that's GDP, that's inflation. I don't know, Fed, what do you think? I mean, I think it's pretty undisputed what's going to happen, but I don't know, what do you see anything else, and what we're going to hear announced tomorrow in the US from the Fed?
I think that 75 basis points is practically a larger, everybody kind of agrees. And I think Powell confirmed it even one more time with a statement he makes. So I guess we can really, there is probably going to be a 75 basis point increase, and it's probably going to be priced in. So this rate hike is for me not the interesting one. I think the more interesting one is going to be in August. And
not a September one. There's no August one. September.
Oh, sorry. Every 8 weeks.
Yeah, it depends.
So
they have like those various stages. So the next one is going to be in September. Yeah.
Yeah. So the end of August, beginning of September, it must be then. It's going to be the really interesting one. And if just the sentiment or what I hear people talking about, like for example, I follow the people that I like to follow on macroeconomics are Luke Gurman, Lynn Alden, and Arthur Hayes. Both, all three of them, they provide really great insights on. Most of them have a very traditionalist approach, but I really like to follow them, and all of them are saying that probably in September or the one after that could be the moment where the Fed really pivots. Or it's what all of them try to say as well. It's not really that it's about the interest rate, and it's not a numbers game, because the numbers game, we practically are losing the numbers game. It's more the rhetoric or the narrative that is and the emotions that investors have attached to them. Just the hint that the Fed could pivot, or just the hint that it could go into the other direction, could lead to a massive pump. Even though the underlying issue is not really fixed. It's more that the narrative and the rhetoric that they're driving, if they can influence and change that and keep control over that, I think, yeah. There it could be potentially, and you talked about this many times, a bullish ending to 2022.
Yeah, and I think the major thing again, right, is, so just to give you the dates. So the next one after the 28th, 28 is going to be July 27, 28. Then we have September 21, September 22, right? So that's, yeah, in 8 weeks, as you mentioned. And then we have November 2nd, 3rd. So that's going to be an interesting one because it's just before midterm elections, which I think are on the 8th, as far as I'm correct. So if I remember, November 8th. And then we have mid-December. And at the moment, right, the expectation obviously is that we see 75 basis points this week. People still debating, is it going to be 50 or 75 in September? But then they're all kind of looking into 25 in November and December. So the thing is this, right? If these things happen, then it's basically priced in. So that's the key thing to understand, right? So it's not about whether we're going to see 75 basis points, let's say in September. It is the signaling, it's the expectation of what's coming. And so the reason I just really want to highlight that is because people always tend to believe that, oh, the interest rates need to be, the interest rate need to change in September. So in September, they need to go down with the interest rate. No. It is that in September, they need to really adjust the interest rate. They need to, here, let me pull up a slide. You can take a look here. So if you're watching the YouTube video later on, then I hope this works. Then you should see the numbers here. Yeah, so September, November, December. So it's all about the actual signaling. It's about what could happen. And so at the moment, a lot of people are expecting that by September, around the September kind of updates, the Fed is going to signal that in 2023, they're going to lower rates or stop raising rates, right? So that's going to be a key concept to really understand in all of that. So, yeah, but I don't know. I agree. I think, to be honest, anything other than 50, other than 75, so be it 50 or 100 basis points, I think that's almost havoc for the Fed. I think this will be absolutely a nuclear option. Because like 50 basis points, like the market would be so confused on what's the Fed doing. Is the Fed seeing something that we're not seeing? So yeah, this is just absolutely essential to understand.
Maybe we can round this off a little bit with going into the crypto Bitcoin part of the whole discussion. What would that mean for risk on assets? What would that mean for crypto? Should I start with?
Please.
Okay, so what baffles me, and I saw a really good tweet from Greg Foss, Canadian bond trader, and it kind of made me rethink, because for the longer time, at least for the summer months since May, since the sell-off really started, I was under the impression that 17.5 is probably not going to be the low, and that we're probably going to go lower than that. And within the last 2 or 3 weeks, I saw a lot of charts where they looked into capitulation, in volume, in did people sell below the price where they bought, like Tesla, for example. The thing that baffles me the most is that you practically had the biggest player in the space, like 3 Arrow Capital and Celsius and a lot of other institutions going completely belly up, practically insolvent, illiquid, and things like Terra Luna that happened in advance of that. And you need to remember that the market that we are in right now, it is 24/7, 365. There is no emergency breaks. There is nothing. It's just trading. And if there is a sell-off, the sell-off will play out. And I think when Greg Foss reiterated it in that tweet, the market actually took this quite okay. For the amount of liquidations and the amount of companies that suffered from these circumstances, the market did pretty okay, and was able to stomach the volatility. And in cases like that, in 360 in 365 24/7 markets, events like this could really bring something down to nearly zero. But the market took this kind of well, and we saw a capitulation that was bigger than March 2020 or bigger than 2018. So I'm contemplating with the idea that the bottom in crypto could already be in, that we see maybe that stocks are going to suffer a little bit more, but that crypto or Bitcoin in general is going to hold up pretty well, because we already saw the larger part of the drawdown. Of course, you can never know. A lot of people are actually calling for lower prices. If you look at surveys from bigger influencers, a larger part of the people are still calling for 12K, for 15K Bitcoin, some even for 4 digits. So you can see everything from 1,000 to 3,000 to 8,000. There's a lot of bearish calls at the moment. And sometimes I try to be a little bit of a contrarian. I know you play this a lot better than I do. But usually I'm scared at the bottom to buy, and I'm leveraged longs at the highs. So and right now, if you really think, if all of us think that prices will go lower and there is nobody selling, we probably are not going to go lower. What would you say? What are the chances that we are still going to see more downside, or that the bottom maybe is already behind us?
I mean, I am quite confident for this year that we probably going to see higher prices this year. So, I mean, the statistic on this, we shared this a couple of times for the second half of the year, with such a first half of the year is very strong for a very good year. Or let's say a good second half. The year is probably going to still be red for most of the assets, but like from here onwards, it could be quite good. The big question really becomes, what's going to happen next year, right? What's going to happen to housing? I think that's a very big question mark. Of course, what's going to happen to all the liquidations, the insolvencies? What's going to happen to those? What's going to happen to 3 Arrows? What's going to happen to Celsius? What's going to happen to Voyager? I mean, there's like I don't know, like I think at the moment we have like 5, 6, 7 companies with billions of dollars in assets, where you just sit there and you're like, man, I don't know if these assets get sold off. Obviously, we have the Mt. Gox stuff happening in August. So let's see. We have the Ethereum merge, right? So these are all things that like are very difficult right now to predict. But in general, I would actually agree with you that we're going to see more upside from here rather than downside. Yeah, difficult to predict what's going to happen in 2023. I mean, sure, we need to revisit that along the way. But yeah, I actually believe with I agree. I mean, let me try to pull something else up. We do have, I mean, I don't know what you think about this. We closed just barely under the 200 weekly moving average. It was like by a hair. That like on Sunday it was the 200 weekly moving average was at 22,704. At the end we closed at 22,579. So it was literally like $125. I don't know. Do you give it some significance? Do you think that doesn't really matter at the moment? I mean, we're even lower. How do you see all that?
The funny thing is, if you would have asked me this question a year ago, I would have said I would give this a very high impact. This is very bad if we close under the 200 weekly moving average. But we took, like, there were certain things that we kind of took for granted, that Bitcoin is never going to go below an all-time high, that Bitcoin is never going to go to close below the 200 weekly moving average. 4-year cycle is a thing, 100, like stock to flow. We had all these kinds of models and all these kinds of promises that we thought were true. And every model or every promise is practically here to be broken. And this is what we are seeing right now. So right now, I'm like, I try to be a contrarian a little bit to myself and also to the market. It's super difficult to be, but sometimes I really think these things happen for a reason, and they're kind of here to take your coins, to throw you out of the market. That you think, okay, we're going to get rejected from the 200 weekly moving average. This is a weak sign. You need to sell. There is more downside, and the market is going to turn on you. Like, I think Udi Wetmeyer, he had a great tweet on that where he said, I'm paraphrasing here, I don't know the tweet by words, but he said, people think that this is max pain where we are in right now, and he said no. Max pain is we go up to 25k, you go in, we go down to 17.5k, you sell, and then we're gonna pump again to 30k, you go all in, we go down to 16k, you capitulate, are completely down to the market, and then we go to 100k. That's max pain. And so I don't know, I try to, I know you told me this 18 months ago, that don't give too much relevancy to technical analysis and to charts, and I'm getting there. I gave a lot of power to price charts. You can, like everybody that's watching the video, I have a lot of screens here behind me where the Bitcoin price is on. I'm not a trader, but I tend to look at the price chart a lot. For me, I always say in company internal meetings, the Bitcoin price, which is open behind me on the screen, is the community happiness index. If it goes up, everybody's super happy. If it goes down, people are not so happy. But yeah, I would not give it a lot of significance right now. Yeah.
Agree. How do you see Elon? I mean, obviously lots in the news lately. He mentioned this even himself last week. Tesla selling 75% of their Bitcoin holdings, close to $1 billion. I talked a lot about on that on my personal channel, where I said very smart move in my opinion by him for bolstering their P&L. Obviously, the crypto community didn't take that so lightly, understandably, but the market really didn't care so much. I mean, sure, it sold off slightly, but I'm not sure if that had anything to do with him. Now there's this entire story about Sergey Brin and his ex-wife, and Elon supposedly having slept or having done something, and then Elon denying that. I don't know. How do you see that in the community? How do you see that for Bitcoin? Nothing Burger or Big Thing, or what was the chatter there?
So us crypto people, like he said a few things that he's not going to dump, that he has diamond hands, and everybody was like, he was kind of the hero when he came into the crypto scene, and when he bought Bitcoin, when Tesla bought Bitcoin, he talked about it. He was like on top of the hype, and everybody loved him. Of course, there was some backfire when they sold, and you could no longer buy Teslas with Bitcoin. But right now, if you look from company perspective, from Tesla, he definitely did the right move, because I think it's an accounting problem. They practically needed to book this as a loss when you have an unrealized loss, and they probably, or at least in my opinion, correct me if I'm wrong, they did this for accounting reasons, for their earnings, and which it's actually not that bad what he did. Of course, a few people, they kind of dislike him for that, but I don't know. He's lately, the thing that you mentioned with Sergey Brin, there is a lot, like the classic media outlets, they don't like him because he's a wild card. He does what he wants. He has a gigantic reach. He has a lot of influence, and yeah, this is of course not really what the media likes, or the politicians. They like to be in control of these things, and Elon is a complete wild card. And I think we probably going to see a lot more of accusations like the one with Sergey Brin, where Elon already stated publicly that this is not true, and he even posted a photo with him and Sergey Brin at some party.
You know what I do think though on all that? I mean, I do agree, and to be honest, I mean, I think this, I've shared this a lot. I have been a Tesla investor for a very long time. I don't even know anymore for how long, like years. And to me, whether Elon is cheating or is I don't know, screwing whatever kind of women doesn't change my opinion about his opinion on being able to lead a company. Right? To me, these are two completely different things. I can really differentiate that. However, if I were in his shoes and I wanted to like destroy the Wall Street Journal, right, that broke that story, and I'm with Sergey at that party, I simply would have switched on my camera and I would have said, "Hey, Sergey, what do you think about that Wall Street Journal story?" And he could have just said, "Dude, that's fucking bullshit." That 6 seconds that Elon then posts on his Twitter feed, just imagine. I mean, that would destroy, I mean, that would be such a reputational destruction for the Wall Street Journal, right? And if Sergey is best buddies with Elon, I would not expect this to be an issue, right? Especially if they're seeing each other already. That's why they are posting that. So that is just the only kind of, like, I don't know, thing that I would throw in. To me, it's always the same criticism I have for Tether, right? So like Tether makes all this hocus pocus about everything. Why not just kind of like release the audit, right? Like, it's always the same thing. Like, why do all this hocus pocus? Why have like 6,000 stories? Just go straight to the meat, right? And it's, yeah. So, I mean, that would just destroy, just imagine, right? So it's not, because as far as I know, and again, I'm definitely not a Sergey Brin expert, but as far as I know, he has been very quiet, very kind of, not in a public eye. So I don't even know if he has a Twitter account or like a public kind of thing where Sergey could go and say, "Hey, this is absolutely bullshit." But it would be so easy for Elon, right? So it would be so easy to just go and record that, because he was taking a picture anyway. So just say, "Hey, dude, Sergey, what do you think about that Wall Street Journal article?" Right? And yeah, so that's my only kind of criticism to the entire thing, where I'd be like, man, that would have just squashed, and that would have been so destructive. That, I mean, just think about such a statement, right? That would have been so harmful for the Wall Street Journal. So, yeah, just 2 cents on that. Yeah. Do we want to finish on the promotion that's going on right now? Maybe you're gonna quickly want to walk us through. We have quite a nice promo on the company going on. Titled, we have a blog post. We'll link this up below in the video. Also under the tweet, win a free holiday worth $3,000. Join our asset liquidity mining promotion. Do you want to quickly run people through what they have to do?
Yeah, sure. So we have a promotion that runs from yesterday to 15th of August. So a few weeks, and it's super straightforward actually. If you go into the mobile app, or if you go log in on the web, you will see a complete guide and blog post that explains everything. What it comes down to is you have the chance to win a nice holiday worth $3,000, and all you need to do is, with a minimum of $50 or more, to participate in our liquidity mining pools, and this is specific to the assets. And so we talked about the macroeconomic landscape. It doesn't really matter what you think will happen. We have the asset for you to make the bet. If you want to go into a gold ETF, or if you want to go into exposure to real estate, or direct exposure into tech stocks, or whatever, there is an asset for you. The only thing worth mentioning, US citizens are sadly excluded from this promotion. For everybody else, this should be working. And you can just go on liquidity mining, select one of the pool pairs you are interested, allocate $50 or more, and keep the funds in there for at least 7 days. I think after the promotion. So during the promotion and after the promotion, or 7 days?
After the promotion, after 7 days after the promotion ends, yeah.
Yeah, okay. So if you allocate the day, you keep that in there until August 22, and that's it. You are going to earn rewards on that as usual. And plus, on top of that, you have the opportunity to win a nice vacation right on time for at least Northern Hemisphere's summertime. So yeah, go into cakedefi.com and have a look at our current promotion.
Great. Nothing else from my side. I think we covered it all. Personally, I think this week is going to be very much a nothing burger. I think it's going to be a critical week, but if everything goes as planned, it should be a relatively smooth ride. Let's see how this goes. We're going to definitely discuss it next week. Fabio, anything on the last side? Obviously, if you're not a Cake customer yet, go to cakedefi.com. Sign up. If we are hiring, we're one of the companies still hiring, then please go to cakedefi.com/jobs. And yeah, I don't know, any last words from your side, anything we didn't address that needs to be mentioned? Obviously, subscribe, like, follow, whatever, do all the social media stuff.
I really hope that our recording of today worked out. We're going to try to improve up on that. If it's not perfect, give us another week. And by then, it's going to be even better. If you want to see this with video, you can head on to YouTube. It's going to be on Spotify. It's going to be on Apple. And maybe we can teaser a little bit what we have, that we are going to do a product-specific Twitter space sometime in August. We have, like, if you go to our Twitter on Cake DeFi Twitter, you can see the pinned tweet is an interview that Julian, or a teaser for an interview that Julian had with Mr. Money TV, and we're going to talk about a brand new industry first product that we are all really, really excited about. The video from Mr. Money TV is scheduled for August, and we are going to fabricate and push out a lot more content where we will share a lot of insights into what this product is, how it functions, and so on. But definitely some super exciting things coming.
Very nice. Thanks so much, Fabio. Appreciate it. Everyone have a beautiful week. Talk next week. Thanks so much. Cheers.